partner of Geosphere Capital, is with us now. Arvind, good evening to you in US. I'm sure you're watching all the news flow. Do you think the market will take it and move on, or as we're seeing with the Dow futures as well, this could present the first real correction, or could provide the trigger for the first real correction of this year?
I think the jury is out. It depends on what comes next, right? Because clearly Russia is a key backer. How does Russia respond? Locally, Iran is a key backer. How does Iran respond? So those are part of the unknowns that we'll have to see how they develop. But clearly, the world is becoming a more uncertain place. Trump has threatened action against North Korea. This will, probably escalate risks on that front, and that creates more risks around South Korea and Japan, which are neighbors. So that's another one that is in the mix right now. Syria, obviously, we don't know how the response will go. So I would say that, these are times when there's really no urgency to buy on the first dip till we understand how the situation will play out. But clearly, the isolationist Trump is out of the window. And what we saw today was President Trump talking about the fact that, strong America standing up against chemical weapons spread is in long-term U.S. interests, which is what most of us have believed. And I think President Trump is now coming around to that viewpoint. So I don't know how this will play out, but it suddenly suggests that, isolationism, at least for now, is out of the window.
Absolutely, Arvind. Now Trump joins the string of American presidents who discovered that America can't be isolationist. Woodrow Wilson, Herbert Hoover, Ted Roosevelt, and the rest had to join in when there were global conflicts. Actually, let's try and gauge what the Russian response might be. And while we are only 90 minutes into this attack, how does it look like? Does it look like a 90-day affair? Does it look like a 9-day affair? Or does it look like a one attack and that's it? Naresh Chandra.
Arvind, come in on this, because this is this strike actually marks the first large-scale military operation by Donald Trump. So we really don't know which way things could head. I heard you mention a while back that long-term investors should not rush in and buy this dip. So what would your recommendation be to Indian investors sitting so far away from the event? Is this a time to move to some cash? Would you rush to buy into some safe haven assets? What would you recommend now?
Well, let's look at what's moving today. It may or may not last, but right now, gold and oil, like you mentioned earlier, are amongst the assets that are seeing, flight to those assets. You're also seeing U.S. bonds, so it's kind of a risk-off trade. So I would say that while there's no great reason to sell the market here, I don't think rushing in with both feet at the first drop is the right call, because we had obviously the news about RBI unexpectedly raising the repo rate. That was a slightly negative surprise, and then now you have oil running, and that creates, if oil keeps going, that creates some risk of inflation, and we don't know where that will play out. But that is certainly something that we would be thinking that you could have room to go there. So I think from an India macroeconomic standpoint, both from a funds flow and from a inflation risk and oil risk, there could be a little bit of a turbulent ride here. So I would wait for a more meaningful, attractive entry point before we jump in with both.
Okay, so for India in particular, we are at 9,200 now, 9,260 actually. What would be a good buying zone?
If it got below 9,000.
Oh, really? Okay. Well, a final question to you, Mr. Naresh Chandra. You correctly said that I shouldn't be calling this an Iraq moment because American boots are not on Syrian soil. Should we therefore not read that Trump's political isolationism going out of the window would mean that his trade isolationism will also go? Do you think he'll be more clement towards world, multilateral deals?
Much of this depends on domestic factors. I think the Syrian issue is not going to dictate his policy on the economic front. He will continue with the same because at the moment he and his team are worried about his falling ratings, and he will continue to, I think, take populist action and continue to be pro-business as he has shown. So as far as the stability of the market is concerned and investors, I think they will have to follow a policy of wait and watch for some time.
Okay, Mr. Chandra, thank you for joining us and giving us your thoughts. So that's the political angle, but from a market angle, let's just take one quick look because the Dow futures are now down, still down about 0.5% or so, and the SGX Nifty is also indicating that there could be a minor cut in trade today. Arvind, coming back to that point you were making about the RBI policy, we also heard a lot of comments on what the government or what the RBI plans to do with regards to NPA resolution, etc. How have you read into all of those comments, and what would you do with a big chunk of this market like banks?
Well, I mean, I think we clearly have a bifurcation in the banking sector. While you get trading rallies in some of the more challenged with NPA banks, whether it's the PSU banks or some of the more challenged private sector banks, the well-run private sector banks have done well, and those are clearly in a better position. I think, at some point here, the NPA cycle is not going to keep getting worse, and things will get better. I'm not inclined to rush in and buy the more challenged banks, but I'm sure there'll be a lot of money to be made at some point. I'm just not sure that anything that came out from RBI yesterday or anything that's going on today in the geopolitical front makes it particularly compelling to go out, because there's plenty of NBFCs and well-run banks that we'd be buying on pullbacks before we'd be wanting to dip our toe there. But there will be a trade. I'm just not sure if it's
actually there. Arvind, I'm a little intrigued. You're saying you're not going to buy anything until you go below 9,000?
Well, I mean, I think again, we don't buy the index. We buy individual stocks. So we have individual stocks where frankly, some of the mid-caps might see a bigger pullback. And if we saw that, then we'd be inclined to buy individual names which we have on our buy list at the right price. So my sense is a 2-3% correction, if this thing plays out a little more, with a little more negative reaction, is possible, but it's not necessarily necessary. So it might end up happening that you get a modest pullback and then the market continues. And we don't feel any great compulsion to have to put money to work today. We're looking for good companies at right prices. And if it presents itself in this action, we would seize it. But I don't see any compulsion that today, if the market's down 50 points, we have to rush out and buy equities on that basis.
Okay. Last question from my end, Arvind. Of course, we've all been saying that this market is being driven by liquidity. But do you think this market is also sensing earnings rebound? Because that would be the major test of this market.
That is absolutely, to us, the most important thing, right? I mean, at the end of the day, yes, liquidity is going to drive valuations to probably levels that would make most of us price-sensitive, value-sensitive buyers maybe feel like a nosebleed. But the reality is that at the end of the day, the earnings recovery is one that's keeps getting interrupted. Obviously, last quarter somewhat by demonetization, but we think that we're seeing early signs from companies that this quarter, and if not this quarter, certainly FY18 is shaping up to be a very strong earnings recovery year. So seeing more signposts along the way on that would be a very important factor in driving this market. But, I think oil is one wild card that could be a negative in that earnings recovery picture.
Okay, Arvind Sanger, you have a good evening and a great weekend. Thank you for stopping by on this unscheduled visit and talking to us about how investors should approach the geopolitical crisis that we are facing currently.